Good morning everyone. Welcome to Banao Bharat's Trading for Living Monday live session. I think there is some light issues here. Well, we are about 1 hour into the trade now, and Nifty, after having opened once again on the downside, has made the first green candle. Let us look into the Nifty chart now. Nifty currently in downtrend, opened at 17,542 and in the second candle made a high of 17,829, which means about 300 points movement in the first candle, and from there on it is now trading sideways, currently trading at 17,744. So there was a big breakout of news in the last week regarding Adani and Adani group companies. So because of which there was some panic selling across the board, and you could see relentless falling of many stocks, especially the Adani group stocks. And today, over the weekend, there has been some amount of reply to the Hindenburg's report by Adani group. So there is some semblance here today. Whether it will continue with this and will it stay here for some time and move up, or again will it fall on a budgets day, we don't know yet. So this is the chart of Nifty for now. 17,750, opened at 17,542, went up to 17,800 and currently trading at 17,750. So it will face a resistance at 17,800 if it goes up, or if it comes down to again 17,542, there will be some more selling if it comes down below today's opening low of 17,542. So this is the chart of Nifty, and here we are with Bank Nifty chart. Again opened lower, very similar to the Nifty chart. 39,900 was the opening. From 39,900 went up to 41,100, which means about 1,150 points or about 1,200 points of first candle movement. So currently trading at 40,669. So you can say for the last 1 hour, Nifty as well as Bank Nifty have traded within the first candle range. There has been a very big opening range or opening candle range, and rest of the candles are within that range as of now. Will it break out of the current range or will it make new levels is what we need to wait and watch. So this is with respect to Bank Nifty on intraday time frame, currently trading at 40,661, made a low of 39,943 and went up to 41,129. We will, before going into the charts of other stocks, we will quickly look into the Adani group stocks and see what's happening there. Adani group in F&O. Let us see. ACC opened at around 1925, 1916 and went up to 2081 and back to the lows of 1918. So we are ACC, though opened higher, is not able to sustain. Second candle is a red one and now it is coming down. So this is with respect to the ACC, very closer to the opening lows. Will it break opening lows and go down? If it goes down, then there is a support of 1744. So if it comes down, there might be some buying around 1744. But today being a very volatile day, we need to play the stocks accordingly. Adani Enterprises opens at around 2844. Goes up to 3055, from there on comes back to 2932, currently trading at 2932. Unlike Nifty and Bank Nifty, which opened lower and went higher, these stocks, Adani group stocks, have opened higher and now trading sideways. Adani Port opens higher at 612. Friday closing has been at 540. So today opens at 612, almost 70 rupees higher to the Friday's low. And from there on went up to 663, currently trading at 612. Adani Ports also in the downtrend but currently trading sideways. Ambuja Cement, there was a big fall on Friday afternoon, made a low of 347. This was in fact a multi-month low. From there on, today it has opened higher and opened at 393, went up to 428, currently trading towards the day's low. In fact, the cement stocks all have come back to the opening lows. Ambuja Cement as well as ACC both have come back to the opening lows. So from here on, if it goes down, then there might be some more buying at the lower levels, because these people or these stocks have made certain patterns, because they have opened higher. If it comes down, there is a chances of some amount of buying in. In fact, Adani's FPO is still on, and we should see how the subscription is for today, Monday and Tuesday. There is a budget on Wednesday, and there is a Fed policy also in this week itself. So there are a lot of events that are coming up, big events days. The question to be asked is, whenever there is a big event, how do we really trade? For a trader or for a stocks trader who's a technical trader, the events should not matter. If he keeps avoiding the stocks or trading because of events, then he will start noticing one or the other event is there all the time. Sometimes the events are related to macro, sometimes the events are related to political, sometimes the events are related to a certain sector, or sometimes the events are related to some stocks. So there is no dearth of events at any time, and if you keep avoiding the markets because of events, if you say now Adani's event is going on, so I will stay out of the market, tomorrow budget is there, so I will stay out of the market, or day after tomorrow there is a Fed policy and I will stay out of the market, or there is a bank policy, out of market, or if Modi says something, you will be the markets become volatile and you will stay out of the market. There is no end to it. What I mean to say is the volatility is part of the game. Start embracing volatility and then admit it. Yes, it is going to be like this. One or the other way, there is going to be volatility in the market, there is going to be uncertainty in the market. You have chosen this field for being in the field of uncertainty to make some handsome returns. So you have to control your risk, manage your risk, and see how you can navigate among these uncertainties. So it is always going to be uncertain. Markets are never certain, mainly because we do not know how to read the markets. If you know how to read the markets, then many times it becomes little comforting. It's not trading in the markets is not very difficult. In fact, there are so many options. If you feel uncomfortable, you can trade lesser quantities, or you can stay out of the market for 1 or 2 days, or when you see the real setup, do not hesitate to put in your money with conviction. What is important is how well you are prepared with your setups, how well you are prepared with your rules, how well you are able to read the chart. During market hours, do not watch TV, do not watch the news, do not watch the events calendar, watch the chart. The more and more the events are there, more and more I would say you should be watching the chart. Once you watch the chart will reflect, it will take away all the noise and it will only show the price candles. For example, here we are having on screen Ambuja Cement. No matter what kind of event or what kind of discussions, what kind of interviews, what kind of talks or noise is going on behind the scene, we don't know any of those things because we do not watch them. All that we just sit and watch is Ambuja Cement as a stock to trade. Now if you see, of course there is a price fluctuations here, currently trading at 393, okay, but it is not very volatile. It is, each tick is around 394.25, 394.35, 395.20. so each tick is just about 5 paise or 10 paise. It is not violently swinging. But if you see the news, you will get so much disturbed, because people are putting in emotions when they talk about the particular stock. You can watch the anchor or any TV channel, they create the kind of hype which will only disturb you. But if you see the chart, if you see the candles, if you see the price movement, you can see, yes, there is price fluctuations each tick by tick. It will not like, current tick is not at 394 and the next tick is not at 398. The next tick is only at 394.25 or 395 or 395.25. The tick size is just about 5 paise or 10 paise or 25 paise or 50 paise. It might, the speed of change, the rate of change is visually not disturbing. You can see any stock for that matter. I will show you the chart of Adani Enterprises. Okay, Adani Enterprises, we don't know what is happening on TV, we don't know what is the news coming in, we don't know what are the kind of discussions that are going on behind the scene or on the news channels or on the social media or on Twitter or anywhere for that matter, because we can avoid 90% of the noise just by watching the price. Price says okay, 2929.70, 2932.50, 2928.40. So the price change is only about 4 rupees. For a 3000 rupees stock, the price change is about 4 rupees. Each tick is about 3 to 4 rupees change. It is still manageable because you can see here on the whole this stock currently is trading within the first candle range. When you get the comfort of this stock is trading within the first candle range, then it becomes little bit calmer for you. You can take your trading decision only below 2844, that is the first candle low, or only above 3055. Do not venture out into buying or selling hoping this might cut days low or hoping this might cut days high. Only if it cuts opening candle high or opening candle low, then you have a system in place so that you can trade in a much better way. For me, I wouldn't even enter if I have to trade Adani Enterprises for now. Then my next entry is only at 3400. Until I don't see 3400 on screen, I will not even trade, no matter what is happening behind the scene, no matter what kind of discussions are going on, no matter what kind of new reports are coming or new news is coming out, no matter what kind of interpretations or opinions or social media responses are for this particular stock. So once you start viewing the market in this way, then you become suddenly unaffected by the news and events. So today's discussion is mainly on whenever there is an event, should we to trade or not trade. Whether there is an event or not, you should always be in the market to some extent, and if you are anyway not comfortable, you can stay out for few days. That's not a big deal, but beware of events, because all the time there is going to be some or the other event. You cannot stop the events from happening. All that you can do is you can calm yourself by stop watching the news or stop watching the events or stop tracking the developments in those fields. If at all you have to do any tracking of development, you have to track the development of the price. Prices have been falling from 3400 to 2800. So there has been 600 points fall. Today there has been about 300 points higher open. You have to track the price movements. This is much easier to track. This is much easier to judge. This is much easier to form an opinion. Otherwise, if you start listening to the opinions of the news anchors, of the social media influencers, or so many news that keeps coming out, so many opinions that keep coming out, then you will never be able to make your own decision. Here, when you are looking at the candle is just showing you the price ticks, and for you to infer, you should have a handle. If you have a handle on how to infer a price movement, then it becomes that much more easier for you to be in the market at all times. There could be war anywhere, there could be crude price oil spike up, or gold could be going up for whatever reason. There could be any kind of events happening in the world. No matter what happens where, all of those things are distilled into one parameter, which is called as price. One single parameter consolidates everything into itself. So look into the price and you know everything else, or once you look into the price, you don't have to know anything else. Only when you know how to see the price, you don't have to know anything else. You don't have to know whether Adani has given any statements, whether Hindenburg has accepted the statements, whether is this wind is passing through. So all that will get reflected in one single parameter, which is called as price. So It's very important we become the watchers of the price and not watchers of the events. If you are a trader, if you are a technical trader, if you are an investor, then it's a different ball game. Investor, because the purpose of you buying a stock is for long term, and the purpose of you the objective of your investment is for growth of the company and you growing along with the company. So if you have ended up buying any stock or company which has been involved in malpractices, then you should be aware of it. So it is important that you should know the actual developments in the company's events. So if you are an investor, yes, it makes sense to be aware of the news, not the opinions. Receive the news and make your own opinion. Do not listen to the opinions of the media. Media also, I would say, like, they also have only the half truths. Nobody knows anything for sure. Even if you see that way, even on the technical side, we traders, we also don't know anything. We just look into the computer, we just log into our charts and we look into the charts and we try to make some inference based on the price action. It's not like, we really don't know what's happening in any of the company for that matter, whether it is Adani or Reliance or SBI, or we are not experts of any industry, we are not experts of any economics. We are just like, we have learned one small skill of looking into the price action and making some decision based on the price action or price movements, purely statistical price movements. So we are also like, nobody knows for sure. What I'm trying to say is nobody knows for sure of what's happening. We all have to live with half information. We don't know full information. Nobody on this earth knows anything fully. We all have to live and survive only with limited information or limited knowledge. We have to make a living out of limited knowledge. So that being the case, what is the best way of living with limited knowledge? I have found a way of living with limited knowledge only through technical price action. So based on that, I have developed certain patterns. I have identified certain patterns which have been repeating in the market and which keeps repeating as long as the markets are there. So identifying the patterns and then trading the pattern, hoping in the last time whenever the pattern had occurred, it had behaved this way, and this time the same pattern has occurred, so it will behave the same way. It may not, all the time it may not behave the same way, the same patterns. Sometimes it will behave differently also. So the success ratio for any pattern trader or any technical trader is just about, say, little more than half. So when you say you are living with a probability of little more than half, then accordingly what makes you a winner in the game is not your technical skills, it is your risk management. When you are winning, how far you are allowed to make money, or when you are losing, how quickly you will exit your trades. So that is what matters. Risk management, identifying the setups, entering into the trade, automating your whole thought process is what we teach at Trading for Living. Here, if you join the program, we will make you read we will make you understand how to read the charts, how to set up your day-to-day trading activities, and we will teach you the mechanics of stock markets, which will give you a lot of kind of comfort and confidence in your trading journey. Having said that, if you are liking the content that is being done in Banao Bharat, do like and subscribe to this channel and share this to your peer traders also. Every day we will be on live for few time, and very soon we will be starting on the market town hall, wherein the other traders can come and join with us and live trade with us. So during the live session we will be on live from 9 AM to 3 PM, and during the live session lot of concepts will be discussed with the participants. So if you are interested, look out for more posts on market town hall very soon. Let us have a very profitable journey. Let us trade carefully and see some decent returns in the market. Big events are coming, be prepared for that. Well, we will again meet up with one more live session tomorrow morning. Until then, Om Swasti.